Hi, everyone. Hope you're having a great summer. I'm going to be filling in for Kim on today's Wealthcast. Before we dive in, a quick introduction. My name is Justin Hobbs. I'm a certified financial planner with almost a decade of experience in personal finance. I'm one of the advisors at Wealth Legacy Institute, and we'll be celebrating my 5-year anniversary with the firm later this month. Today's topic is on I-bonds, and if they're still a good investment in 2023. You know, as a financial advisor, I'm often asked money questions anytime I'm at a party or gathering. And I can tell you confidently, the number one question I was asked about last year was I-bonds. And so what are they and why were they so popular in 2022? Well, inflation-protected savings bonds, or I-bonds for short, are a type of investment that was created by the US government. It was introduced to help individuals protect their savings from the effects of inflation. And unlike a normal bond that usually has a fixed interest rate, I-bonds have an interest rate that adjusts based on the changes in inflation. And as you may remember, inflation in 2022 was a really hot topic. It was the highest it had been since the early 1980s, and it had a big impact on the interest rate that was paid by I-bonds. So at one point, that interest rate you could get on an I-bond was a little over 9.5% when inflation peaked in June of 2022. So it makes sense why everyone was asking about this investment last year. However, that high interest rate did not last long. The Federal Reserve, with their aggressive rate hikes, has brought inflation down considerably since the peak of last year. This has had an impact on the interest rate paid by I-bonds. And so today, that current rate has dropped from 9.5% to about 4.3%. That's a big difference. And this has led a lot of investors, especially ones who may have been considering buying an I-bond in 2022, if they should be purchasing one this year. Now, before we answer if you should be buying an I-bond or not, or if it's right for you, let's first discuss how do I-bonds even fit in a portfolio? Well, they can be a valuable addition because they act as a safeguard against inflation, and they're considered a safe investment because they're issued and backed by the US government. But I-bonds aren't for everyone, because remember, the primary goal of an I-bond is to protect your money from inflation. So they may not be a great investment for longer-term retirement goals, and there may be better options out there based on your risk tolerance. Think like stocks or real estate or other investments. And so really, I think that there's two questions that you should ask yourself when you're considering purchasing an I-bond. And that first question is, what is the money for? Remember, I-bonds are a good option for investors looking for a safe way to protect their money from inflation. They're really designed for a specific goal in the future. So they're a great option for things like future college expenses, a couple that may want to purchase a home in a couple of years, but they want to make sure that the money that they're saving today is worth the same amount, regardless of what happens with inflation in the future. The next question, number two, is when do you need the money? Okay, this is really important. If you need the money soon, I-bonds may not be a good option because you can't cash them out within the first 12 months after you've purchased them. But really, as a general rule of thumb, you should purchase an I-bond with the expectation that you're going to hold it for at least 5 years. Now, there's some alternatives to I-bonds that could be a good fit for you depending on what your goals are. One option is to invest in just a high yield savings account. These accounts usually pay a higher interest rate than just a normal bank savings account, and you can access the money anytime, which is a huge benefit. However, they may not keep up with inflation like I-bonds will. So if that is your goal, to keep up with inflation, another option is Treasury inflation protected securities, or TIPS for short. They're similar to I-bonds in that they earn interest that is tied to the inflation rate. However, they are a bit more complex, so you may want to talk with your financial advisor before trying to purchase one. So is it too late to buy I-bonds in 2023? Well, the short answer is it depends. If you have a specific future goal like I said, think college expenses for a young child or grandchild, and you want to protect the purchasing power of that money without taking on a lot of risk, they're a great option. But if your goal for the money you're investing is to earn returns above inflation, I-bonds may not be a good fit for you. And you may want to consider alternatives like stocks or real estate or other investments based on your risk tolerance. Well, that concludes today's Wealthcast on I-bonds, and if there's still a good investment in 2023. Thank you for joining me today. And if you want to learn more about I-bonds, be sure to check out the recent article we wrote on our website at wealthlegacyinstitute.com. Have a great day.